For a lot of persons, they have an idea. So you have an idea, you want to go into business, you feel confident that if you go into business, you launch your own business, you can make it and you can make money. But guess what may be that deterrent to you is the fact that you do not know where to get the money from to get the business going. Now, if you're that person, you need to check out this video. I'm going to share with you roughly 18 thereabouts sources of funding that are available to entrepreneurs. So whether you are an existing entrepreneur or you're just starting off, in entrepreneurship, you are what we would describe as a nascent entrepreneur, this video is for you. Or it may be that you're studying entrepreneurship. All right, my name is Roger, and if you are not yet a subscriber to my channel, please, I'd really welcome you becoming a subscriber. All right, let's jump right into the video. Now, in the video, I'm going to be splitting the sources into two different categories. So we're going to be looking first of all at internal sources of funding, and then in the latter part, external sources of funding. And what do we have here as the first one? Bootstrapping. Now, this now is where you as an entrepreneur, you build your business from scratch using lean measures, which means that you are being very frugal in your lifestyle, in your spending. So you're not quick to spend if it is not necessary. So the essence here is to keep your expenses and your expenditure down, and to eliminate you incurring any debt or debts. This is what we refer to as non-cash income. And what you're doing here is that you're cutting your expenses and you're making do with whatever equipment or furniture or whatever it is that you need to have in your business. You're just working with whatever you have until later in the future when things become better. That's bootstrapping. Next, you can actually use your credit card. Did you know that you can actually use your credit card as a source of funding in your business? Yes. So you may have a credit card already from your bank. You have a certain amount of limit on it. You can use that in this situation to your advantage. The good thing is that yes, you already have the credit card. It is credit that you have access to. What you need to be wary of though is to ensure that you actually pay the bills when they are due or before the due date. And once your credit history is good and you have a good track record, then over a period of time they will actually increase that limit, and that will be even better for you. All right, then we have the third method now, which is deferred expenses. Here now is where you are delaying paying certain expenses until later. You are essentially prioritizing your expenses here. There may be some expenses that you have to deal with but may not necessarily be pressing. So you can put it off for some time in the future and deal with what is more pressing. That now would enable you to have access to the cash to dump into what is more pressing, and then you can probably use that now to generate more money, which will pay off the expenses which may not necessarily be that pressing. All right, sounds good. Then we have family and friends as another source. That's the fourth source here. So yes, you can call upon your friends and your families to ask them to assist you with a little loan here and there. The beauty of this now is that you, as opposed to say going to the bank, you will not have the obligation of necessarily, based on the arrangement that you have with your friend or family members, you would not have that obligation of having to repay a loan, interest on the money. As I said, based on the arrangement that you have with them, you know that with the bank you have to pay interest, and you're locked into repayment, a fixed repayment period, and you have your regular installments to make. They can be quite overbearing for you, especially if you're just starting off and it takes a little bit of time for the business to get up and running, and for people to know about the business and to start coming in, and for the sales to pick up. So that is something that you may want to consider. All right. Next, we have the fifth method, source of funding, which is investing. Now, investing here and the savings would be basically in the same category. These are monies that you have now. So the investment now may be, for instance, you have some shares in a company. and the monies may be such, it may be quite substantial. You may want to you may think that, well, if I liquidate, if I sell out these shares, get the cash, then I can use it and put in the business. Or it may be monies that you have saved up. You say, okay, I have this. Yes, I can use it in the business. Okay, and this is what a lot of persons do. You may find that they will probably work with your savings first, and then later on, they may think about other options. Okay, then we have retained earnings, and guess what? Where retained earnings is concerned, it's a bit of a tongue twister. No, this note will be referring to those persons who are already in business. So you are an entrepreneur already in business, yeah, because this note is where, for a particular financial year, the business makes a profit, but guess what? You make that choice not to spend the profit, but to put it down, probably put it in a savings account or to invest it. When you say invest, perhaps, as I've mentioned before, to like buy shares with it or something like that, or like a fixed deposit. So retained earnings is a good thing. So it's not always good to go and spend the money. Okay, we see, for instance, even with NCB, another thing that people were cussing about last year, 2022, about NCB, is that NCB made a lot of money. Somewhere in the, I don't really want to quote a figure, but I think it may have been in excess of 15 or 17 billion dollars in profits last year, 2022. And people were saying that, but if you made all of this money, why aren't you paying dividends to your shareholders? Right? Because what they did, what they would have done since about the inception of COVID, is to retain the earnings. They would not have spent the profits that the company would have made. Based on if my memory serves me right, yes. Since COVID came in. Okay, so all of that money would be saved up somewhere, or invested. Right? And then we have sale of asset. This now is where you may have some piece of equipment, or it may be a motor vehicle, it may be a piece of land somewhere, and you say, okay, if I dispose of that, I can have access to X amount of cash, which I can use now in the business. Okay, so those are 8 sources of internal funding which are available to you, the entrepreneur. Now let us move now to look at the external sources that are available to you as an entrepreneur. And again, if you haven't subscribed to my channel, please, I would really appreciate you coming on board, becoming a subscriber. Alright, please remember to like the video also, especially if you've been getting value from the content. Now, where external sources of funding is concerned, this now is split into 2 different areas. So we have equity and we have debt financing. Now, with equity financing, it is where you have somebody coming on board, or a company coming on board as co-owner in the business, and they're dumping monies into your business. Well, by virtue of them dumping in money into your business, you will not, that would make you not sole owner anymore, but co-owner. All right. And then we have debt financing. So we're going to be looking first of all at equity financing. And here, as you can see, 3 different avenues. So we have the angel investor. Now, this is that individual now who has access to financial resources, and what they do, some people it is like a lifestyle. What they do is that they go around and they look at prospects, upcoming ventures, and they will assess them, and once they consider them to be viable, they have promises, there's a possibility of them being profitable, then what they do, they dump money into them. Okay, no, look here now. The thing about this now is that when this happens, you are no longer co-owner. When this happens also, it means that yes, you lose your 100% control in the business, and also on the good side, you find that yes, they're putting money into the business, and they may also have technical competencies that they come to the business with, which is a little bit of it's a plus. Okay, The thing too is that the fact that they're doing these things, it reduces your risk in the business. So it is something that you may want to consider. Then we have the venture capitalist, who is that company, and they typically look for those businesses that have, they are high growth potential businesses or startup, and they will, similarly to the angel investor, seek to dump money into them. Of course, nobody's going to be doing this, out of the kindness of their heart, because them love you and them want to see you prosper. They're looking to see what they can get out of it also. All right, and then finally we have the IPO, which is an initial public offer. Now with this, if you go this route as an entrepreneur, you'll be moving from being sole owner to co-owner, and that is because you would not be issuing shares to the public. So your business would then become a public company, which would mean that your accounts, everything about the business would now become public, because it is a public limited company, or it will become a public limited company. Okay? The beauty of it though is that you can raise a lot of money, a lot more money going public, especially if people are very much confident in your business. If the market is really confident in your business, then, as you would have seen, or if people are really eager to invest, as you would have seen post-COVID with a lot of these businesses offering IPOs, a vast majority of them here in Jamaica would have been oversubscribed. All right, so we wrap up now by looking at debt financing, and here now we have bartering. So this now is where you may consider now swapping something that you have, some piece of asset that you have, with somebody else, who has something that you want. So you have this thing. Let's just say you have a photocopying machine, and you want an air conditioning unit. So you swap the photocopying machine for the air conditioning unit. That's bartering. No money coming into play here. That's good for you. Crowdfunding is the next one. Have you heard about crowdfunding? No, this is really one of those phenomenons which we should have come across, evolved because of the development in the internet and the different resources on the internet. Now, this is where you are able to get financing and to possibly raise a lot of money too, by having a small, investors, persons investing money in your business. No, these are people who you do not know. It is that they are looking at your business plan, and they believe in your idea, your business concept, what it is that you're coming to the fore with. So they believe in it, and they contribute money to your business for you to fund it. Now, if you go this route, listen carefully, if you go this route, it means that your business plan, whatever it is, whatever innovation you're coming to the fore with, would not be a secret anymore. You have to bear that in mind. Okay? And of course, you can make a lot of money, where this is concerned. All right? Once people have that confidence in your business. Now, Kickstarter.com, that's one site that you may want to consider to seek funding for your business. Then we have bank loans, which everybody know about bank loans. Yeah, so you go to the bank, you take your cash flow projection to them, you take your feasibility study, your business plan, your feasibility study will be in your business plan. You take it to them, and they look at it, and if they are confident that your business will, be profitable, then you find that they will finance, they will offer you the financing. The thing here is that you would have, as I mentioned earlier, the obligation of repaying interest. You have to repay the loan over a fixed period of time, and you have to pay at regular intervals. Bear in mind that if you encounter financial challenges throughout that loan the life of the loan, then it may affect your ability to repay the loan. Okay. Then we have grants, which is a good thing, because here now we have, for instance, government agencies or foundations or organizations who are offering financing to entrepreneurs for special projects or initiatives. So, like for instance, a couple years ago here in Jamaica, the Ministry of Agriculture, they had recognized a shortfall in pork production. So what they did was to offer, they incentivized pork production. They offered grants in the hope of having farmers go into the production of pork to ease the shortage in the market then. So what they would have done is that they would have given a certain amount of money to farmers for them to go into that line of business. And of course, the thing about this too, what I like about it is that you have the technical support that they will offer. They do monitor the business to ensure that they are working within the guidelines and stipulations, because yes, they won't just be giving you the money, so you have to meet certain stipulations, right? And they do follow up on what is happening with your business. Okay, so that is grants. Then we have leasing, which is another good thing too. So rather than purchasing, outright purchasing an asset, you can consider leasing the asset. It happens a lot, especially with photocopying machines. These machines can be very expensive to acquire. You're talking about, especially those higher end ones, we're looking at like $1 million plus dollars Jamaican. So guess what? There are companies who, what they do is that they lease them, and this is that when you lease, it actually costs you less. You have your monthly installments to pay, or an annual fee, but it will be far less than what you would incur if you were to buy the unit. Now, another plus to this is that you are not responsible for the maintenance of the equipment. They are the ones who will be maintaining the equipment, so it should be at their expense. Well, they will actually build that into your leasing cost, but you would not have to be concerned about that. All right. That is a plus. Or like for farmers, what they do is that they will lease land to do their farming, and that is much cheaper than if they were to go out and to purchase the land. And then we have partnership, which is now you have other persons coming on board. So you have this formal agreement now, where you actually form a partnership, and again, they're offering technical support. They are offering bringing financing to the fore. Okay, and then finally we have trade credit, which is a plus. No, this is more so applicable to those persons who are in the retail industry. So you probably have like I don't know, like a supermarket or a store, you sell clothes or whatever, technologies, gadgets and stuff. You have a company that you purchase from, and guess what? They may say to you, hey, Janet or Mary or whoever, John, we can offer you 7 days credit or 14 days credit or 21 days credit. No, this is good, because guess what? You can get that credit. You get the credit, let's just say 21 days. Yes, be very much ambitious. So 21 days, you go to them, and they normally give you a credit limit. So it may be, for instance, let's just say $1 million. So you go to them, you purchase, perhaps, I don't know, based on your own situation, which is happening with your business, you may utilize the full credit or maybe just be a portion. But your maximum is $1 million. Just an example. And guess what? You get those goods on credit, you sell the goods, and then the money is now you use it, save money from the sales, the proceeds to pay them. Isn't that fantastic? Yes. So trade credit is good. It's a good thing. What you need to do is to work now to maintain having a good credit history, so that they will continue to extend credit to you. And not only that, but that in the future, they may even be looking at increasing your credit limit. Good? All right. So that concludes They're looking at the different sources of funding for entrepreneurs. No, you remember wondering which is best for you? No, I'm not able to say that. This is something that you have to do. You have to make a personal assessment here now, and look at what would best suit you and your situation. Based on the different variables that you have working with. Okay, so I hope that you got value from this video. Is there any that you did not know about before? Drop it in the comments. Again, my name is Roger. Thanks for watching, and please remember to like, share, and to subscribe. See you again in the next video. Take care.